Hey everybody, I'm Brian Shannon from Alphatrends.net. Today is Friday the 26th of January. Hope you had a good week of trading. Let's actually take a look at the closing numbers for the week. I've got those right here. For the week, we did gain ground pretty much across the board. Bonds lost a little bit. That should be green. That is Bitcoin had a nice rally today. We'll talk about Bitcoin and Ethereum because they bounced exactly from where they were supposed to. And Bitcoin is finding a little bit of pause, at least right now, exactly where it's supposed to. Big winner this week was energy. I still think that the group itself is probably not worth trading, but I'm sure people would disagree with that because of the percentage move. I like to focus on what I view as the low risk, high probability trades. On the left, we have a daily chart of the S&P 500. Each candle represents 1 day. On the right, each bar actually represents 30 minutes. That blue line is the week-to-date volume-weighted average price. Every Sunday night when the futures market open, I say, here's the birth of the new week-to-date anchored volume-weighted average price, and that's something that I pay very close attention to. Why? Well, look at the chart. Isn't it pretty convincing right there? We gapped up on Monday, pulled back a little bit, hopped back above that volume-weighted average price from the beginning of the week, and then we touched it perfectly here, and then bounced, and that was where the buyers were. That's why we watch it, because it works. That's it. I was going to say the F word. Because it effing works. What better reason is it? The NASDAQ didn't quite hold the week-to-date volume-weighted average price, but when it starts to go sideways back and forth, it simply says a little bit of caution here. We've had a great run, and as we turn back and forth above and below it, it says maybe this market needs a little bit of time to digest, and it seems as though that's the case. For next week, the S&P, I think the key level is that we want to see hold is right here at about 485. If we break below that level, I'm just assuming it's innocent until proven guilty. What would get me to be a little bit more cautious and maybe even near-term bearish would be if it does something like this, breaks down below that, and then starts to decline further. If we see something like that, well, then I'll adjust accordingly. Otherwise, I'm not going to overthink it. I look at it and say it's in a primary uptrend. Same is true for the NASDAQ. I don't want to overthink it, but I do want to be aware that maybe we're going to see even a gap up, traps people, then comes down to this volume weighted average price. And if that were to happen, I would be looking at it as something like this, then it would come down to that level. So we want to keep an anchor on the day that the high was made for this week in the NASDAQ. That might end up being resistance. So you want to put a preliminary anchor in that point so that we can keep an eye on it and say, does the market respect that as resistance? If so, well, then maybe as a very short-term trader, you're going to short. But with the primary trend still higher, I'm really not interested in shorting. The Russell 2000 had a nice week, actually. I view this as very constructive. It found buyers right at the rising 5-day moving average and the year-to-date anchor. So let's clean this up just a little bit so we can see it. That is the year-to-date anchor. We saw it was resistance earlier in the year. We don't want to buy with a declining 5-day moving average. Now we have a rising 5-day moving average. The year-to-date anchor was tested on its pullback. It held. It made a higher low. It made another higher low. So it's still too choppy for me. But when you look at the daily time frame, that looks like it's tightened. The range is tightening. What I'd really like to see is maybe a little quick shakeout, rebuild, and then middle of next week, we could continue to move higher. I think you want to keep a close eye on the Russell 2000. When you look at the weekly chart, it's a beautiful pullback to the rising 10-week moving average. We discussed previously that it was the anchor from the all-time high, and it was also the 38.2% retracement of the 2022 low to the 2023 low to the 2023 high. Perfect retracement, 38.2%. So that's a level of interest. Maybe you're going to be a buyer. I think that a lot of people have stops underneath this low, which tells me if we're to get a quick shakeout below it, then we could see a real big move not real big, but a nice sustainable move in the Russell 2000. So ideally, it gets that shakeout, scares people, and then recovers, builds a higher low, and then I would want to be a buyer on strength with a stop under here or perhaps under there, or half of my stop under here, half my stop under there. Semiconductors got hit a little bit today. They're still up, really well for the year. And similar to what I just outlined in the NASDAQ, where did they come to? They came down to the next anchor. So if we go back to the NASDAQ, that's this anchor. And for the S&P, for the SMH rather, we came down to that level. So we broke below the week-to-date volume-weighted average price on the gap. We still have a rising 5-day moving average, but that 5-day moving average on Monday, as we get rid of this data on Monday and Tuesday of next week, it says that if the market does this, that 5-day moving average will look like this. And then if it starts to do this sort of thing, well, then it'll be trapped below a declining 5-day moving average. And then we will put a provisional anchor from this peak right here as well and color that red for potential resistance. We don't know if it's going to be resistance, but we want to be aware that this is a provisional. If instead we continue to move higher, then great, we continue to move higher. But right now, this is a potential scenario. And I only say that because we've seen such a strong rally this year. Maybe we pull back all the way down to the anchor from either this low would probably be the next level, but we're right there from this gap. So these are just levels of interest where on the way down, maybe it pauses. The biotechs are still trying to recover in here. I still would prefer an B, C, D move, meaning a measured move. The height of this move should equal the distance of that move, which would bring it down to the 50-day moving average. We're not seeing that so far, but we are stuck below a declining 20-day moving average, and this is where we were 20 days ago. So that 20-day moving average, similar to the 5-day, I'm always trying to anticipate the direction of that. So what about the direction of the 5-day moving average? It's rising today. But if this market does this, well, then we're going to get rid of this data, and that 5-day moving average is going to start to turn lower. And if we break below and hold below 87.50 for more than an hour or so, I think you're going to see the biotechs most likely come down to, and here's how a quick way to look at what that measured move objective is. You take that height, which is right here, to this low right here, and then we would expect from this high for it to come down to that level, same distance. So right in near that 50-day moving average. Is there anything else in that area? Now my camera's in the way, so I've got to go like this to anchor a volume-weighted average price there. The anchor from the low is right here at the year-to-date, last year's anchor and the 200-day moving average. I would prefer it just kind of comes down into here. Some people might be looking at this and saying, isn't that a shoulder? Isn't that a head? Isn't that a shoulder? And maybe it is. But the bottom line is you don't want to get short until we make a lower low below the flat to declining 5-day moving average if you're shorting. And if you are shorting with a rising 50 and 200-day moving average, don't do so with a full size position. That's the way I view it. Financials, actually, let's look at crypto quickly. This is Ethereum, and Ethereum, as I pointed out, the anchor from this low right here, that's exactly where we found some buyers. I had mentioned to subscribers, and I think in the Wednesday video, that I put in a bid at 21.90. I'm happy I did that. I don't do that with stocks. I don't put in bids like this. By the way, if you enjoyed this analysis that I do, I'm running a sale on Alphatrends.net where I talk in depth about stocks, the market every single day, and stocks. Here's what you get. It ends on Sunday, so that's it. After this, it's over. For $1,000, you get 1 year of full Alphatrends subscription, which includes the end-of-day analysis, looking at all the ETFs, the major ETFs that we look at here every single day, just as the market closes. There's another video after that. So the end-of-day video is about 3 to 5 minutes. The next video, up generally about 5 p.m. Eastern, goes over current open positions, stocks like NVIDIA that we own, GNK, Autodesk. We go through those, update the stops, and then we talk about new trade ideas for the next day. The next day at generally about 11 a.m. Eastern, once the market is settled down, I do a quick update, generally about 4 or 5 minute video that says, here are the key things going on with the S&P and the NASDAQ, as well as our stocks. We have every other Monday a webinar, the live interactive webinar for subscribers, where you get to ask questions. We've got a brand new Discord room that's becoming pretty popular. That is right here. These are some of the channels, I guess they call them, that people talk in here about swing trades, day trades, fundamentals, crypto, etc. So we've got a Discord room. You get a one-on-one half-hour webinar with me where we review charts, whatever it is you want. And you get the 2 trading courses as well. So that's enough of my pitch, but that goes away at the end of the weekend. The link is in YouTube below. Be sure to like the video, subscribe, and all that stuff as well. Anyways, Ethereum, nice bounce right where it's supposed to. If it breaks back below here, then perhaps we get a deeper pullback. Bitcoin bounced perfectly as well from the beginning of, if you remember last week and on Wednesday I spoke about, this is where the move began right here. At about $28,000. That's where the move that ran up in front of the ETF approval began. So we set an anchor there. I've had that anchor there for several weeks, and here's the daily chart right now. We came down, we tagged it, and we bounced from it. Let's look at the 2-hour time frame on the right, because the 2-hour time frame, this is the day that the ETFs got approved. And the market, of course, sold out off on that. It was a buy the rumor over here and sell the news. We rallied strongly today, the last 2 days, right into the anchor from there. So I expect we're going to settle down a little bit, maybe trickle down towards 41, make a higher low, and then perhaps this bull market on the weekly time frame above can continue in the crypto space. So Biotechs we just covered. These are some of the open stocks. Like I said, 521.50 is where we purchased NVIDIA couple weeks ago. Still long GNK from $16.20 over in here. Still long some Autodesk from 242, I think it was. Anyways, these are the types of stocks I talk about every single day for subscribers to Alphatrends. They don't all work. We got stopped out of SQSP. We took a third off with a gain of $1 on the day that it gapped right here. We sold another third yesterday right here, and we're stopped out of the balance today. If you had still been holding the stock from the original position, you'd be in a losing position right now. Instead, we locked in $1, we locked in 40 cents or whatever it is, and we locked in 10 cents on the balance. So it's a lot about risk management, obviously. That's what I talk about all the time, and it's not just a phrase. Anyways, energy stocks, big move this week, as we know. They did make it up through the year-to-date anchor. It's really shown no rhyme or reason to me the way this market is moving, other than it made the higher high above the flat to rising 5-day moving average. I expected it would likely pause here a little bit longer, because that's where on the left you see that's the 20-day moving average as well. It didn't do that. So because the overall trend is bearish, I would normally look to short it. I don't trade energy names, but we're coming into now what's been a key level as well. The 200-day moving average, last year's anchor over in here as well. We could set one off of this peak, and you can see that's just above as well. But we still have a very clear pattern here on this daily time frame of lower highs and lower lows. So it's a bounce in a downtrend for energy names. I hope you had a good week of trading. There's been a lot of good action. We've got a lot of earnings next week. Some of the smaller companies are going to start to report, a lot of the big ones as well. So that'll keep you on your toes. We've got the Federal Reserve on Wednesday as well. So it'll be a busy week. Focus on the action of the individual stocks. Don't try to make these macro decisions. If you're long NVIDIA, manage the risk in NVIDIA. If you're short whatever stock you're short, then manage the risk on that and don't worry so much about the market. It's good to know what the market is doing and have an overall bias, but listen to the message of the market first for each and every stock that you trade. Have a good weekend.